Hey, crypto fam, it is Derek Moore, and tonight's analysis is absolutely critical. So, the US House just had the longest vote in American history, over 10 hours of absolute chaos. So, crypto bills hanging by a thread, Trump's tariff bombshells are exploding, and of course, institutions are making moves that'll reshape absolutely everything. So, I've been grinding through the madness, so let's break down what this means for your portfolio. So the US House just made history for all the wrong reasons. So after a record-breaking 10-hour vote, the longest in US history, they finally passed the procedural rule 217-212 to advance three massive crypto bills. But here's what really happened behind this closed doors. So the bills at stake, the Genius Act, stablecoin regulations, which are already passed the Senate, the Clarity Act, which defines the cryptos as securities versus commodities, and the Anti CBDC Act. So that blocks Federal Reserve digital currencies. Well, very hardline Republicans, including Marjorie Taylor Greene and Chip Roy, revolted. They wanted all bills bundled together, fearing that the Senate would cherry pick, well, only the genius and ignore the CBDC plan. Well, Green tweeted, I voted no because it does not include a ban on central bank digital currency. Well, at 9 p.m., Trump summoned 11 congressmen to the Oval Office and personally negotiated the deal. So he posted on Truth Social after a short discussion. They have all agreed to vote tomorrow morning in favor. So anti CBDC provisions will be attached to the must pass National Defense Authorization Act, that NDAA, and guaranteeing passage but creating uncertainty for crypto markets. But while the politicians played games, the markets were already pricing in the uncertainty. So again, while the bills were hung in limbo, Trump dropped another bombshell: 30% tariffs on the EU and Mexico starting August the 1st. That's $1.816 trillion in trade that's under attack. Now, this just isn't about trade policy. This is economic warfare that's reshaping the global markets right now. 976 billion annually, which is America's largest trading partner, and Mexico's trade at 840 billion annually. Combined impact over this, well over 1/3 of all US imports affected corporate pain. And of course, that is Goldman Sachs shows 80% of cost hit importers and foreign producers. So let's talk about first panic, right? Bitcoin dropped 2% to 116,000. Then institutionally buying kicked in. So why is that? Well, because tariffs create currency chaos and Bitcoin becomes the ultimate hedge against fiat instability. Well, Trump's pushing this while claiming to make America the crypto capital. So is this strategic leverage for his world Liberty financial venture or genuine policy? Well, the timing seems to be a bit suspicious. Euro and the peso volatility is already spiking, and when traditional currencies become unstable, crypto, well, like Ethereum corporate takeovers, will kind of goes up. Yeah. Well, though this tariff chaos is creating the perfect conditions for the crypto rotation that's already begun. While everyone's focused on politics, the real story is corporate America's stealth takeover of Ethereum. SharpLink Gaming just became the world's largest corporate Ethereum holder with 280,706 Ethereum, which is worth about $848 million at the current prices. But this is just the beginning. SharpLink's dominance is absolutely staggering. Now, they hold 280,706 Ethereum, which surpasses even the Ethereum Foundation itself. So their strategy is absolutely pure genius. So 99.7% of their holdings are staked for the maximum yield. So since 2nd of June, they've earned around 415 Ethereum in rewards. So that's around 1.25 million in passive income. Well, here's the kicker. They still have 257 million more ready to deploy. So their Ethereum concentration metric has grown 23% in just 1 month. Now, the supply shock is absolutely real. So when corporations stake at this scale, they're removing massive supply from circulation. And this isn't trading, this is building generational wealth through blockchain infrastructure. We're seeing an institutional avalanche. SharpLink recently bought 74,656 Ethereum at $2,852, which is the average between July 7th and the 13th. So they funded this by raising $413 million through stock sales. Well, the ETF flows tell the story. $227 million flowing into Ethereum ETFs versus only 17.19 million into Bitcoin ETFs. Well, more corporates are eyeing Ethereum treasury strategies every week. Now, the altcoin season signals are flashing everywhere. The altcoin season index surged 150% in July to 27th. To the 27th. Well, remember, 75 means full alt season. Bitcoin dominance is slipping from 66% down to 65.77%. Ethereum just smashed through $3,000 resistance to hit $3,027. So we're seeing this massive capital rotation as institutions choose Ethereum over Bitcoin for their treasuries. While institutions stack Ethereum, smaller caps are absolutely exploding. SWGT just hit 0.0862 on LBank. So that's a 46% surge from recent lows. Now, this isn't just another pump. It's a real utility token with real fundamentals backing the move. So here's the SWGT story that has me excited. Now, the price action shows a clean breakout from 0.05 all the way to 0.08. Now, that's a massive 46% gain. Now, the platform behind it is deWork, which is positioning itself as the world's first zero commission freelance marketplace. Now, they've burned 3 million worth of tokens back in January, creating serious supply reduction. Now, plus, they have just completed a CertiK security audit that ranked in the top 10% of all projects. Now, the supply dynamics are incredible. Only 96.5 million tokens circulating out of 1 billion total, meaning 90% is locked away. Now, the technical setup is looking strong. Now, we're seeing 2.14 million SWGT in daily trading volume, which is building serious pressure. Now, the next key resistance level is at 0.085, and if we break that, I'm looking at targets of 0.10 to 0.12 if momentum continues. So right now, we're seeing strong base formation at the 0.08 level. The fundamental catalyst here is real utility. Now, the deWork platform at deWork.swg.io is gaining some serious traction with zero commission freelancing plus gamified play to earn quest. This could actually capture meaningful market share from traditional platforms like Upwork or Fiverr. But let's talk about risk management. So I'm watching for overbought signals above 0.085. Now, this is still a small cap play, so position sizing is absolutely crucial here. Now, these individual moves are part of a bigger technical shift in Bitcoin. So Bitcoin's sitting at a critical crossroads, so trading at 119,386 after hitting the all-time high of 122,979 on July the 14th. The technicals are screaming institutional accumulation while retail sentiment shows dangerous complacency. So let me break down the technical analysis for you. So we're currently sitting at 119,300 or 939.71, which is up about 0.43%, or around it was up yesterday or today at 1.5% and holding remarkably strong. Now, the key support level we absolutely must hold is 118,500. So that's critical for the continued uptrend. And on the upside, 122,000 is our major resistance level. And if we break above that, we're looking at targets of 125K to 128K. Now, the MACD just turned positive, signaling renewed bullish momentum, and we're trading above all major moving averages, the 20, the 50, 100, and 200-day EMAs. The institutional flow is absolutely massive right now. We saw 403 million in ETF inflows led by BlackRock's IBIT fund. Cantor Fitzgerald is eyeing a massive 3.5 billion Bitcoin acquisitions. Large whale holders are accumulating during every dip, and the option markets is showing institutional hedging strategies absolutely everywhere. But here's what worries me about retail sentiment. Now, the fear and greed index is sitting at 74, and that's greed territory, but not quite euphoric just yet. So, funding rates are slightly positive, but not excessive. However, I'm seeing overconfidence building across crypto Twitter, and long positions are increasing. So, though they're still at manageable levels, this feels like the calm before the storm to me. Now, institutions are quietly positioning while retail is celebrating recent gains. History shows us that this combination often leads to explosive moves. But the big question is, which direction will it go? Now, all of these factors are converging into a major setup for the next major move. Here's how all these pieces really fit together. Now, we've got regulatory uncertainty creating volatility, tariff chaos driving safe haven demand, corporate Ethereum hoarding, Well, removing the supply and Bitcoin testing critical resistance. Now, this is the perfect storm for explosive price action. Now, the convergence is incredible when you see it all laid out. Now, on the political front, crypto bills are advancing, but uncertainty still remains about the final passage. Economically, however, we have tariff warfare creating massive currency instability. Corporately, there's unprecedented Ethereum accumulation removing supply from the market. Technically, we're seeing multiple breakout patterns forming simultaneously across the board. And from a sentiment perspective, well, institutions are buying while retail shows dangerous complacency. The next 24 to 48 hours are absolutely critical for everything. For Bitcoin, if we break above that 122K level, well, we're looking at the moon, mission straight to 125,000 and beyond. Ethereum could see corporate buying push it to 3,200 or even 3,500, and SWGT breaking that, well, 0.085, well, resistance could trigger a run all the way to 0.10 to 0.12. Overall, regulatory clarity could trigger massive institutional inflows across the entire market, but let's talk about the risk scenarios too. On the downside, if crypto bills fail, combined with tariff escalation, and we could see Bitcoin test that 112K level, regulatory uncertainty around CBDC concerns could create temporary market confusion, and profit taking by institutions near these resistant levels could actually cap the upside temporarily. Here's the opportunity though. While politicians argue and retail celebrates, smart money is positioning for the next major leg up. Now, this kind of convergence doesn't happen often in the markets, and when it does, it creates truly life changing moves for those positioned correctly. Now, I've been grinding for 15 plus hours straight, tracking every vote, every whale move, every corporate filing, and this convergence of regulatory breakthrough, corporate Ethereum accumulation, and technical breakouts is the setup we've been waiting for. All right, now while retail sleeps on regulatory progress and corporate accumulation, institutions are positioning for the breakout. Don't get left behind when this convergence explodes. Drop a like, and if you're ready for the breakout, hit that notification bell because what happens in the next 48 hours will separate the winners from the watchers.